Hi there, welcome to Kneppy Invest. Time for a technical update. And in today's video, I'm going to be looking at a couple of screeners and fairly similar screeners in terms of 6 months high or 6 months low. So I've done these screeners through TradingView, and right now, the ratio of companies that are a 6-month high compared to 6-month low is 10-1 in favor of those companies that are at least a 6-month low, which gives us a sense of where the overall market is at right now. And that is a bearish sentiment. And right here on the screen, I do have the NASDAQ 100 NDQ, and we are at a fairly, won't say powerful, we'll say fairly strong support level right around about 11,200, because that was the lows we saw back in June. Remember, June was a pretty nasty month, particularly over about a 4 or 5 day period. But then we did see the markets recover. Quite a few commentators thought we'd had entered a new bull market, but that was just a bear market rally. And we have seen the NDQ go down a fair bit over the past 3 or 4 trading days. In fact, the previous week was a pretty bad week because of high inflation than expected. And the Fed has also raised interest rates by 75 basis points. And it does look like the market is fearing probably a worse recession than they were expecting even just a month ago. So it does look like we are heading for slower growth in terms of the economies. And that's why we are seeing the markets fall right now. And I think there is potential the markets will fall a little bit further from here, particularly if they can't get a handle on inflation. And don't forget, the Fed in America has 2 mandates: full employment and price stability. Right now, they are at full employment. There is a possibility that we'll see unemployment rise because of the slower economic growth. But right now, the Fed is interested on price stability. And the enemy of price stability is inflation. So they want inflation down to be between 2 and 3%. Right now, CPI numbers came out as much as 8%. So they're wholly focused on inflation. And the best weapon to fight inflation is higher interest rates. Hence, why we have seen an explosion in interest rates over the past few months. And if they can't control inflation or get inflation to come down, we'll still see interest rates rising from here. And that is also a fear of the markets, that really no one knows how much higher interest rates could go from here. I do expect eventually, particularly when we see that slower growth come through in the economies, we see higher unemployment rates. That's when the Fed and the Reserve Bank in Australia will stop raising interest rates. And there's also the potential that eventually they'll have to start lowering interest rates because of the problems in economies that this sort of environment is leading to. So right now, the NDQ is right at a really strong, again, good, we'll say good support level at 11,200. We did see some buying coming in at the end of trading on the 23rd of September. I have heard some commentators mention that was just short selling, covering their positions at that point in time, just because we were at, or the NDQ was really at that support level. But if the NDQ falls below that support level, that would be a fairly bearish signal. I think there is a chance it will do that over the next few weeks. I wouldn't be surprised to see a little bit of bounce here and then some sort of consolidation around that support level before eventually it falls through. So now on to the stock screener via TradingView. I think I've already set up the first one, which was companies on the ASX that are at 6 months low. And I've listed these companies from the highest market cap to the lowest market cap. So 218 matches. I don't know if this is an absolute list, because this particular screeners is new 6 months lows or new 6 months highs. I'm not sure exactly what the definition is for new. Maybe it's just the previous few trading days. Maybe it's the past week. But anyway, the biggest company on the ASX that is at a 6 month low is Transurban. To be fair with you, we'll have a look at all these charts, by the way. And unfortunately, my head's in the road, so I'll bring that down here. Maybe I'll bring it down here. There we go. Now, I'm not the biggest fan of these sort of monopolies, these toll road owners or operators. There's a couple on this list potentially. Transurban has a market cap of $40 billion. PE ratio is 2,965.9 according to TradingView. Don't know if I believe that or not, but Transurban has a lot of debt, and that's one feature of these sort of companies, a lot of debt. And one of the reasons why these sort of companies might be in favor is because toll roads or toll rates are adjusted for inflation. So a lot of people think these are nice little proxies, but these companies have a lot of debt. So which means in a high interest rate environment, maybe they have to pay more interest, that sort of thing. And the share price right now is moving towards a nice little support level at around about $12.30. The last time we saw that support level tested was back in March of this year. So Transurban is of no interest to me in my investing philosophy, my investing, whatever you want to call it, principles. I have no idea. Anyway, second company on the list is a company I know nothing about, Taylor Resources, a newly listed company on the ASX. When I say newly listed, we're talking about the start of 2021, so I won't linger too long on that. Coles Group is down. Yeah, just went past that June low. So this is one of the other things I'm looking for, is those companies whose share price is now down lower than those June lows we saw. And in fact, Coles share price has really fallen a fair bit over the past month. In fact, the share price reached a high and looked like it was breaking out on the 19th of August. Share price reached a high of $19.65, and current share price is now $16.40. But at this point in time, not a big fan of the supermarkets. I still think they are overvalued because I don't expect significant growth in the future for these sort of companies. And I think unless we see the PE ratio of Coles, Woolworths get lower than 15, I would not be interested in taking a long-term position in these companies. So no interest in Coles at this point in time. Sonic Healthcare is a company. Now, I'm not going to go through all 218 companies. So I'm only looking at companies I might be thinking there could be some good value right now because the share price has fallen a fair bit. So at this point in time, Sonic Healthcare is a company I would be looking at. Share price, not only is it a 6-month low, but we have to go all the way back, looks like to May 2020 before we saw the share price this low. Now, this company was a beneficiary of COVID-19. Now, those tailwinds have come to an end, but I think the market is overreacting right now. And the PE ratio of the company is 10. Now, that's based off probably higher than normal profits based off COVID-19, that sort of thing. But I think the market is still overreacting here. This company is growing at an albeit slow rate, but I do think there is potential here for Sonic Healthcare moving forward, particularly if the share price falls a fair bit from here. ASX, I won't spend much time on ASX. I've actually never done any research on this company, so I won't linger here. PE ratio, according to TradingView, is 27.4. Suncorp, another company I really have no interest at this point in time. You can see the share price is right at the March low. So if it falls any further from here, we're looking at a multi-year low with Suncorp Group. Endeavour Group hasn't been on the ASX for too long. So this company was spun out of Woolworths, and the share price is now just at a 6-month low. But overall, if you go back from when this company first started trading on the ASX back in June 2021, share price actually has increased from there. APA Group, not a lot of interest in this company, infrastructure company. You can see share price has taken a fair bit of a hit over the past month or two, and again, 6-month low. TPG Telecom, I have been a customer of this company for 15 years, and I am no longer a customer of this company. I have transitioned because I'm moving from fiber to the node to fiber to the premises, and I'm getting a real good deal with one of TPG's competitors. And it seems like based off the financial year results, which were released on the 19th of August, share price fell 12%. The market did not like these results, and the share price has kept on falling. So this was sort of a signal to sell if you were holding TPG shares. And in fact, the share price is very close to a nice little support level. That support level is the lows we saw back in May 2021. If it moves lower than that, that would be an all-time low for this edition of TPG, because on this chart, TPG doesn't go all the way back to the early 2000s when they listed on the ASX. It only goes back to July 2020 when this might have something to do with Vodafone. I don't know. Well, or maybe I have no idea why this chart doesn't go all the way back. Because I remember actually owning this company way back in 2011 and 12, but for some reason we can't get the long-term chart for TPG. But share price is moving down, and very disappointing results when you do look at their financial year 22 results. Atlas Arteria is another one of those toll road operators. Dexus would be a property, REIT, that sort of thing. And looks like I have looked at this in the past, a nice support level, right around about $8.30, or maybe even a bit lower than that. We'll just put it lower than that. And it has, the share price of this company has fallen through that. The last time share price was this low for Dexus, geez, you have to go back a fair bit. Oh, we're going all the way back to 2016-15. I am starting to get interested in property groups or REITs, simply because, again, I do think the market is overreacting, and the discount to tangible assets right now for some of these companies is ridiculous, and nice yields as well. So this does this have a yield here? No. Share price of $7.91, market cap 8.7 billion, P ratio 5.5. Some of these yields of these REITs or property groups are heading towards 10% because of this sort of this negative sentiment in this sector. But the share price and really this negative sentiment is being driven by higher interest rates. And if we do see a turnaround in interest rates, instead of moving up, moving down, that's when we might see these companies' share price bounce. So some of these valuations of these companies are looking fairly interesting. And that's the same with Mirvac Group. Stockland Group, I think he's an owner of supermarkets, so fairly similar. GPT, I don't know much about GPT, but that's in a downtrend. Ampol Energy Company, not much interested in this company. Next company I do have a bit of interest in is Seek. And right now, one of the reasons I'm interested in Seek right now is the share price is at a really good support level at around about $18.90. That support level started way back in 2019. If you go back to August 2019, we saw a little bit of a dip in share price, then it bounced, and then we saw another dip in the share price after COVID-19, right on to $18.80. Then we saw a bounce. Then we saw it again in June, saw share price reach that support level and have it bounce. Now it's reached it again. There is, I think, a greater possibility share price might pull lower or through that support level because of weaknesses in the market. Another big down day on the overseas markets on Friday, which might translate onto the ASX on Monday. So wouldn't be surprised to see Seek fall through that support level. But I'm becoming more interested in this company, even though TradingView says the P ratio is 42. I think if you look at the real PE ratio of this company, I think it's a little bit lower than that, particularly if you look at the forward PE ratio. It's like the PEG PE growth. I think that would be significantly lower than 42. I do think this company has the potential to grow and continue to grow over the next 5 to 10 years. Next company, Orica. I don't know much about Orica. I'm not interested in this chart at this point in time. Another company, though, I am interested in is Domino's Pizza, another beneficiary of COVID-19. And we saw the share price reach low of about $44 or so, $43, $42, $43 during the depths of the COVID-19 financial panic. And then people realized this company wasn't going to benefit from lockdowns and that sort of thing. That's why the share price quadrupled to a high of $165 in September 2021. The share price has fallen from 165 all the way down to less than 60, 53 right now. And this company is starting to look more and more attractive. PE ratio is coming down. There is going to be good growth for this company over the next 5 to 10 years, in my opinion. Now, I was listening to my Ausbiz, my core, and I'm 1 month behind. And about 1 month ago, there was a commentator mentioning that the share price of Domino's Pizza shouldn't fall below $60 because of a lot of support at $60. A lot of investors we think there's pretty good value for this company at 60, and she didn't expect this share price of this company to drop below 60. It has, and you can see why she might have been thinking that, because the share price bounced off $60 in June on my birthday, 14th of June, hit $60 again at the start of September. Nice little bounce, but then on strength, it's fallen through that support level. This was on strength, really good volume coming through, and there was no support whatsoever with that share price falling through. So the bears are absolute control of Domino's Pizzas right now. But as the share price falls and falls and falls, there are going to be more and more investors who see value. So those are going to be the investors who start buying. And those are that's the reason why we might see a floor in these sort of companies' share price. Share price of these companies won't continue to fall forever because of value attached to the share price of the company at a particular prices. So I think if the share price of Domino's Pizzas falls below the COVID-19 lows, I think that would be a really good buy. So I have put Domino's Pizzas onto my watch list, just watching the share price fall. And if it keeps on falling, I think this could be a nice little buy if you like it. Cube Holdings, I've never been interested in this company. I think this company has been overvalued every single time I looked at it. Maybe that's why the share price is moving into a downtrend. And right now, share price is again a multi-year low. AGL Energy, the only reason I'd buy this company is for a trade, like a short-term trade. I did that about 6 or 7 months ago. Then I've sold out because you just see here, share price is now turning down and the share price is at a 9-month low. Next DC, I don't know if I linger this one. Does look like Next DC has moved past through a level of support. So this again is a bullish or bearish turn of events for this company. That support level was $9.70. Current share price is around $9. You just see the PE ratio. So TradingView has a PE ratio of 465. Now, this company is growing their revenue at a pretty good rate. Eventually, this company will be producing a fair bit of cash flow, but right now they're not doing it. So you've got to look at that PE ratio with a grain of salt. Illumina, don't really care about that company much. I'm looking for another. Evolution Mining. Gold mining companies are starting to look more and more interesting. I think you can see the PE ratio for Evolution Mining, 11.37. Some gold miners have a PE ratio of less than 5. Sometimes you have to be wary of value traps, but I do think the market is overreacting to the drop in the gold prices, and I think we are getting to the point where a lot of gold companies are looking attractive just based on value. I would like to see a bit of a turnaround in the gold prices, although if we look at the weekly chart for Evolution, the last time the share price was at $2 was way back in 2017, late 2016. You can just see the share price, nice uptrend from about 2015 all the way through to 2020. Now the share price is in a downtrend. Don't know how much lower the share price go, but I think there could be some good value for some of these gold miners. Downer, interesting downer. So even though I've got 218 matches, once we get to a certain market cap, companies that are not making profit, I'm not going to look at those in depth, but Downer has gone through support. Quite a few other companies have gone through support, and this Downer has gone through support in the last few weeks. So this does look negative right now. So I don't know about the value. So it has a PE ratio of 22.5. I have to have a closer look. The last time share price was this low was actually in 2020. So another company with 2-year low. Flight Centre, I'm not sure why there's negative sentiment in regards to some travel companies. Now, Flight Centre was trading above this trend line, this sloping line. It fell through that support line a few months ago and is now moving lower. So even though I haven't been the biggest bull in regards to travel companies, if these sort of companies' share price falls a fair bit further from here, that's when I will become interested in Flight Centre. Corporate Travel Management is another one, maybe Hello World. Another REIT, Charter Hall Long Whale. One of the companies I think this is retail, not retail, office. I wouldn't be interested in office. I'd be interested in industrial REITs, maybe even convenience REITs like DXC, I think the ticker code is. But the share price of Charter Hall Long Whale is at a multi-year low. And one of the reasons, again, is because of rising interest rates. These sort of companies could become interesting if we start to see the possibility of interest rates not rising much further. Reliance Worldwide Corporation, this is a company I do own for the long term. Again, a multi-year low, P ratio 15. I think that's really good value for this company at this point in time. I do expect some good growth. Another property group, Shopping Centres Australia, Aurora. I think this is a packaging group, if I remember correctly. Won't spend much time on that. Growth Point Property. So you can see a lot of property companies on this list because of dropping or rising interest rates, not dropping interest rates, rising interest rates. Homeco Daily Needs, REIT, BP Trust, which is Bunnings. I'm going to look for any other interesting companies that I might be thinking of buying if the value or the share price drops any further from here. Ticker data, I still think is a little bit overvalued for my liking, but the share price is dropping. Share price drops further from here, significant amount from here. I will become interested in ticker data, Centuria Industrial REITs. So this is one of the companies I might be looking at taking a position if share price drops further from here. P ratio 4.6, although you shouldn't be really looking at P ratios for these sort of companies. I'll probably be looking at the discount to NTA, FIFO, funds from operation, and how the value is related to the funds from operation. But the share price is at a multi-year low, again, just like other REITs. So even though the share price is dropping from here, there will become a point when I would take an interest just because of valuation for some of these companies. Centuria Capital Group, probably another REIT or property company. So let's go quicker through this now. Blackmores is at really interesting level. If the share price drops another $4 from here, $60 is a really strong support level for Blackmores. We have seen the share price reach $60 quite a few times over the past few years, and the share price is moving towards that level. If the share price falls below $60, that will be a bearish sign. So a good way to play, a possible way to play some of these companies is if the share price hits and then we see a bounce off that support level, that would be a good short-term trade, maybe not the long-term trade. You want to see some value, in my opinion, if you are thinking about buying these companies for the long term. Blackmores has a possibility for some really good growth, particularly if they expand into China, those sort of areas. But at this point in time, fairly anemic growth for Blackmores over the past 3 or 4 years. Adbury, I remember this company as Adelaide and Brighton. They've kept the ticker code ABC, but the share price does look pretty ugly. Maybe some good value because the share price is moving towards the lows we saw during the COVID-19 financial panic. The PE ratio is about 11.86. So maybe some good value possibly for that company. Credit Corp, CCP. I haven't actually looked at this for a while. This could be looking interesting. So share price is at a multi-year low for this company as well. Share price has almost decreased 50% from its highs in the start of 2022. Just a fair bit of negative sentiment. So I'd probably just wait unless I see good value. P ratio 12, maybe there's good value with Credit Corp right now. I haven't had a look at this company for a while, so I might have to have a look. I think maybe the market is being a little bit too negative about Credit Corp. Another gold company I think is really undervalued right now. Just my opinion. P ratio 4.8, markup 1.1 at a nice little support level. And I would actually be thinking about buying gold companies right now. I have 2 gold companies, but I might be adding gold companies to my portfolio if I see any further weakness, significant weakness in the prices, because I think there is possible good value. And again, I think the market is overreacting to the gold price drops. GUD Holdings, I don't know much. I think they manufacture of kitchen stuff, if I remember correctly. But again, share price right now is at a strong support level, and that support level was the COVID-19 lows. So the market right now has the same sentiment for this company that it did during the trough or the peak of the COVID-19 financial panic. And that's true for quite a few companies. So that's amazing to think that some of these companies' share price is almost identical to the lows during the COVID-19 financial panic. Mass Group, fairly new IPO, 2 years or so, but in December 2020. Share price went on a tear after they IPO. Could you see the share price went from around about $2.40 all the way to a high of $6.20, but the share price is turning down now. I've never done any research on Mass Group, MGH. Maybe it's time to do some research. Another company I think the market is overreacting is Codan. Right now, the PE ratio of this company is above 10. The share price has dropped 70% from its highs in June of last year, where the share price reached a high above $19. Current share price is less than $6. And the only negative thing about Codan, even though I think there might be some good value, is the reaction from the market. When the company released the financial year results on the 18th of August, share price dropped 10% on that day, 3.6% the next day, and then 3.9% the next day. So that was a catalyst to set out. Look, it did look like the share price was trying to turn, sentiment was shifting, but the financial year results sort of put a stop to that possible shift in sentiment and the trend in the share price, and the share price definitely at a multi-year low right now. So market cap of that company is 1 billion. Novonix has support levels and resistance levels at round numbers, which tells me a lot about those sort of people, investors buying into the company. So a lot of retail investors love Novonix, and retail investors love round numbers. So there was a really strong support and resistance level at $4, another strong support resistance level at $2, and the share price has fallen through that $2 support level recently. In fact, on the 23rd of September, share price closed at $1.90, and that support level was tested 3 times in the past, and now it has failed. So bearish on Novonix moving forward, because the share price has dropped significantly since its highs in late 2021. So share price has dropped from $12.50 to $2. So again, not much revenue for that company. All the valuation of Novonix was all built on hype and expectations from those people who just believe the story. And maybe those expectations were a little bit too high for Novonix. Rural Funds, Vulcan Steel, Centuria Office REIT. I probably wouldn't be interested in Hansen Technologies, a company I'm interested in simply because I am an owner, long-term owner of this company. I'll continue to own this company for a long time. I wouldn't say it's good value right now, P ratio above 20, but I do think this company has potential to grow significantly from here. But on the negative side, the share price has moved through a support level at $4.60. Not interested in Ingham's. Dexus Industria, might be a little bit more interested in that. Australian Clinical Labs, no surprise, the share price of this company is falling. Very similar to Sonic Healthcare. I'm not sure there's as much value in this company as Sonic Healthcare. Sonic Healthcare is the bigger one. I think the safer one, lower risk. And before, so Australian Clinical Labs did list on the market in 2020. So I think it was May 2020, no, May 2021. And they really took advantage of the tailwinds because of COVID-19. And those tailwinds are coming to an end. And that's why we're seeing the share price drop for Australian Clinical Labs. Smart Group, a little bit interested. The share price of this company has dropped. It's dropped a fair bit. Geez. And if we look at the share price right now, so I'm just going to put in a trend line. So see that lows back in October 2020, and the share price looks like it has gone through those lows we saw back in 2020. So current share price is at multi-year lows and moving towards COVID-19 financial panic lows. P ratio 11, market cap 718. I'll be becoming interested in that company. Strike Energy, know nothing about that. GDI Property Group, another property company. Service Stream. I think eventually this company will turn around, but you can see no P ratio. I don't think they're profitable, but I think their company has experienced problems. Did look like the share price was trying to break out a few months ago, but again, negative financial year results on the 23rd of August. Share price dropped 17% of that day, and that really put a stop to any growing positive sentiment in that company. DGL Group, I did own this company for a while. I could just see again in negative financial results. Share price of DGL Group dropped 36% on the back of their financial results, and the share price is moving towards the IPO price, which was around $1. Current share price is less than $1.50. I think that company, we might be seeing some good value with DGL. PE ratio 15. So I think the market again is overreacting, and that's how you do sometimes find value when the market overreacts. Appen, even though I'm a shareholder of Appen, I probably would not take a position in this company until I see signs that the company is turning around. Until I see signs that management have got some sort of understanding of what they need to do to turn this company around. Share price in a well-defined downtrend. Resimac, don't know much. City Chic. Oh, look at that. Share price has dropped from $6.75 all the way to $1.50. P ratio 16.7 for a company that's growing pretty good. This last time share price was this low was, wow, it's just after the COVID-19 lows. If the share price gets to say 75 cents, which is half from here, so it's a fair bit lower, this would be looking really interesting. It's starting to look interesting. I'm going to have to put this on my watch list, City Chic. Australian Strategic Materials, don't know anything about that. Platinum Capital, Amcool, Steamships Trading. So we're getting to low market caps. Symbio, the old MyNet phone. Oh, this is starting to look interesting as well. We're going to look at the weekly chart just to see last time share price was this low. So the share price is moving towards really good resistance or support levels. So just draw a line, not a set support level. You can just see how back in 2015, 16, 14, 15, 16, share price was just going sideways for a long time here at these prices. And the share price has pulled back to these prices a couple of times in the past, back in 2019 and during the COVID-19 financial panic. And now the share price has pulled back to that. So possible value. I haven't had a look at this company for many, many years. Maybe it's now time to take a look at Symbio. Superloop. Now, when I changed internet providers from TPG to my new provider, I won't say who it is. Superloop was one of those potential providers I was looking at. It was in the finalist group. 2 was in the finalist group, but I decided on their competitor simply because they gave me a 1-year discount. Superloop was only willing to give me a 6-month discount, but the share price of this company is falling towards a nice little support level, which is that COVID-19 financial panic low. So I'm getting interested in Superloop, just like some other companies on this list. And I am seeing possible good value in quite a few of these companies, including Superloop. Resolute Mining, another gold company. Won't talk about that. Any more companies? So we're moving towards Metals X. This is a company I nearly bought because of a nice uptrend in the share price. And if we go back to the daily chart, you can see that nice uptrend developed through it, or it sort of broke out late 2020 and went all the way through to April 2022. Share price rose from about, we'll say, about 8 cents all the way to a high of nearly 80 cents. So that's almost a 10-bagger in a short period of time. But the sentiment in this company has totally shifted around from positive to sentiment, positive to negative. Share price has dropped from 80 cents all the way down to just above 25 cents. Possible consolidating. If you look at the daily chart, that is the daily chart, possible consolidating over the past month or so. Share price just going sideways. Anyway, Auswide Bank. So no other company. Redbubble's just completely tanked. Keeps on dropping. Share price of Redbubble has dropped from $7 to current share price of 66.5. So sort of a reverse 10-bagger. Not sort of company you don't want to be owning, but maybe there's good value. Maybe again the market's overreacting. Keepath. I think that might be the end. We're getting to lower quality companies here. Image Resources is a company I still own. Maybe I should just sold because the trend changed, but this does have a P ratio of 4.2, really nice dividend yield as well. So I'm going to maintain holding that company just because of the dividend. Berkeley Energia, which is uranium, which is interesting. So maybe uranium companies are starting, or genetic signatures. I think eventually this company will look interesting. Market cap 127. Oh, this is a profitable company, cash flow positive company that has a potential to grow significantly from here. Was a beneficiary of COVID-19 for a while. In fact, I've got post-COVID here. You can see share price just after COVID-19 financial panic zoomed all the way up to almost $3. So I think, again, maybe the market is overreacting. MoneyMe is another company I like. I think we might end it there because we're moving towards companies with a market cap less than $100 million. Wiser, Electro Optics, market cap 78. Wow, fallen like a rock. Metro Mining, Drone Shield. Shiro Holdings is a company that is profitable. P ratio 5.2, EV to EBITDA 2.88. So even though we're gone below companies with a market cap of less than $100 million, there are still some companies here that are profitable. I wouldn't say Shiro Holdings is growing, but if the share price does drop a fair bit from here, maybe have a look at that. Mayfield Childcare, Brookside Energy. Okay, so now we'll go from looking at those companies at a 6-month low to those companies at a 6-month high, which means I'll have to move my camera here. So we'll get rid of new 6-month low, and then we'll find the new 6-month high. We should have about 22 matches. So remember, new 6-month low was 230 matches. New 6-month high, 22 matches. That should give you an indication without even looking at the overall market sentiment that there is negative market sentiment right now. So let's have a look from, well, the two biggest companies with positive sentiment, 6-month highs, coal companies. Remember a few years ago, Everyone hated, even a year ago, everyone hated coal companies. These have been the best performers on the ASX, probably international exchanges, over the past year. If you held coal companies, you have done fantastically well, even though the overall market has gone down. And you should just see the very fact that Whitehaven Coal share price is a beautiful uptrend. Look at that uptrend. Wow. And it just seems like it's the uptrend is accelerating, which I get a little bit wary of, and probably the same with New Hope. Yeah, look at New Hope. Here we are. Yeah. So my problem with, and when you look at the PE ratios of both of these companies, Whitehaven 4.6, New Hope 5.8, you might think there's really good value here. But as soon as the coal prices start falling, you will start to see the share price of these companies fall, because the share price will mirror the coal prices. Now, I have heard some commentators say that the coal market is broken because there's been no investment in coal exploration because banks refuse to fund coal exploration. That's not exactly true now, because I have seen a few companies, coal exploring companies, list on the ASX recently. So it doesn't matter that the banks won't give them any funds, because these coal explorers can go to the market to raise a lot of money because coal prices are at really high levels. And as more coal companies are listed on the ASX, start exploring, that's when we're going to see a possible increase in supply of coal. And if demand starts to fall, we're going to get an imbalance between supply and demand. More supply, less demand, which means if you have higher supply than demand, the price of that supply is going to drop. This happens with every single commodity. Whenever there's an imbalance between supply and demand, you're going to see the price of that commodity change and shift and go down or up, depending on the dynamics. So eventually that's going to happen to coal. The share prices of these companies won't continue to go up. They might still go up for the next few months, but eventually they will start to go down once you see coal prices start to go down. And coal prices are at historic highs right now as well. And you should also always be wary when anything is at historic highs, when it's a cyclical thing. And all commodities are cyclical. So end rant here. So the third company on this list is Neuron Pharmaceuticals. This is no surprise. Funny enough, only two companies with a markup above $1 billion are at 6-month highs. And those are two coal companies. The third company on this list is Neuron Pharmaceuticals with a markup of 915. It's no surprise that this company is at a 6-month high, because the share price rose on the 7th of December, 91%. I took a position in this company at that point in time because of that announcement in regards to Rett syndrome. It's been validated by the FDA, if I remember correctly, or something. In fact, we can have a look. Let's have a look. So Neuron, what date was that? That was the 7th of December, if I remember correctly. So let's go back a year. December 7th, positive top-line results from phase 3 trial. The reason why the market is really excited about this company and why the share price keeps on increasing, is more than doubled from when I took a position, is because of the potential money flowing into this company over the next few years. So Neuron is eligible to receive potential milestone payments of up to $455 million plus tiered escalating double-digit percentage royalties on net sales of trofinetide. Neuron could earn revenue of over 2022, 2023 for Rett syndrome in the US alone of 111 million Australian dollars plus double-digit percentage royalties. This company has that potential of absolutely bringing in the cash over the next 2 years. That's why the share price of this company is not being affected by the overall negative sentiment in the market. That's why the share price keeps on rising. And I think there is potential. The share price of this company can keep on rising significantly from here. So do your own research, that sort of thing, on Neuron Pharmaceuticals. There's still a fair bit of risk. Agosi Minerals, I don't know anything about this company. Share price in nice uptrend. I'm going to say Agosi Minerals is a lithium explorer. Markup of 807 million. I think the lithium fad eventually will die off. There are reasons behind why I think lithium. I think in the long term, lithium, you don't want to be owning lithium companies for the long term because, again, demand, supply. A plethora of lithium companies, exploring companies, have listed on the ASX in the past year. So eventually there's going to be an imbalance between the supply and demand. Even if demand rises rapidly, there could be the potential where supply rises at an even greater rate than the demand. So we're going to have an oversupply, and that's when you're going to see lithium prices fall away. It happens all the time with commodity stocks. It's going to happen eventually with lithium. KSC, KNS Corporation. Don't know much about this company, but in fact, I'm just going to bring my camera down. Look at KNS. It was trading in this range. So I put this range as 2 orange lines. So I put this range a fair while ago. So how long has this been trading in a range? Since 2016. 2016, this company has been trading in a range between about $1.17 and $1.90. So whenever the share price got about $1.90, you sold. When the share price got to about $1.20, you bought. What has happened in the last few days? Technical works. Look at this. Share price went above the top of that range on strength and then kept on rising. And the reason why technicals work is because of human psychology. I've actually had people say, well, of course it's going to do that, because it's sort of one of those situations where it's, what do you call it, where your prediction comes true because it's, I have no idea what I'm talking about here. Self-fulfilling prophecy, that's what I want to say. So that I've been told it's just a self-fulfilling prophecy. This is going to happen because people start buying it, because it goes through that. Yeah, that's technical analysis. It's all about human psychology. People see a share price go above a resistance level like that, the top of the range, and they think, well, now's the time to buy. It's a breakout. Yes, that's technicals. It's all about human psychology. And this KNS Corporation is proof that technical analysis does work a lot of the time. Mma Offshore. This is another company I own in my portfolio. A beautiful, beautiful uptrend. Share price keeps on rising. This company does not care about the overall sentiment in the market. They have boats in regards to used to be oil and that sort of thing, but they're starting to diversify. I think this company has a lot further to go from here, potentially over the next few years. You can just see a definite breakout back in February 2022, around about 47.5 cents, and the share price keeps on increasing. So nice positive sentiment behind that company. PTB Group, I think there was a takeover bid for this company. Yeah, so just ignore that company. Apollo Tourism, share price popped up on the Friday. 23rd of September, something to do with the merger. I don't really know because I don't follow that company. GreenX Metals, I have no idea what this company does. Maybe it's lithium, maybe it's hydrogen, maybe it's something to do with just the name GreenX screams out something to do with lithium, hydrogen or something like that. XTech, I'm bullish on XTech. And one of the reasons why the market is excited about this company, and you can just see the share price getting above the old highs we saw back in June, and now we're seeing share price move towards a multi-year high. The reason why this company, and you can see the breakout in the share price of this company was back in February. What happened in February? Ukraine, Russia. So this company is benefiting from that tailwind. So it has a tailwind, including, organizations buying this company's armor. And that could continue for a while from here. And this company will be bringing in a lot of cash. In fact, more than likely, they will be declaring a dividend for financial year 23. Probably won't be declaring the dividend for another year. But a market cap of 46, P ratio of 7.3, EV to EBITDA 10.6. And those numbers, and because the cash flow is going to increase in financial year 23, more than likely, I think this company is still significantly undervalued, in my opinion. Lane May Resources, know nothing about this company. Let's not linger on that. Kicker, I think there's been a takeover bid for Kicker. Yep. This one looks interesting. Ragusa, look at that beautiful breakout. So this is a lithium company. I had a look at the announcement that caused that breakout, and this, lithium, only a market cap of 41.9 million. So the market's getting very excited about this. So the latest lithium fad company is Ragusa Minerals, Osco Healthcare. So we're getting to very low markups. I think I might leave it there. Anything else interesting here? No. So leave it there. So at this point in time, so the ratio of those companies at a 6-month low compared to a 6-month high is 10-1. So at this point in time, if you do use technical analysis, use sentiment and trends, there's much less opportunities out there right now, but there's still opportunities out there. Hello, Neuron Pharmaceuticals. Hello, coal companies. hello, Xtech, hello, what are the other companies? I forgot it. Oh, Mma Offshore, KNS Corporation, Agosi Minerals, all looking pretty good now, just based off technicals. So even though the market is fairly negative right now, there's still companies out there that are seeing their share price go up from here. So if you do have any questions, any thoughts, any feelings, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.